Alrighty guys, what is going up? Welcome back to the best investing money management channel, guys. We got to make sure that we are up and loaded. I did send everything to the team here. So if you guys have any questions about any stocks that we're going over, let me know down in the comments, okay? Ask questions, because for me too, it's all about learning. The more you learn, the more you guys are going to earn in the future. So I think we are up and loaded here. I just want to make sure that the volume and all of that fun stuff is going good. So we're just going to go on my channel here. I do apologize with how long it is taking, but let's see. There we go. All right, we're good. Alrighty, guys. So starting off, what stocks did we cover the past couple of weeks that we've been looking at? Well, we did look at AMD. This is one that I recently just covered some positions on. Okay, let's wait for it to load. Sometimes, just so you guys know, with me streaming and having this up and all of my other stuff, it does take sometimes a little bit more to load up, right? So what I noticed about AMD is it did have some very strong support here at 74. You guys can see it comes in contact and we get buying pressure, okay? We get buying pressure here, here, here. So what I did, I set an alert just like I did right here. And then I set some pretty much resistance here at around 83, more up here at 94. But once it came in contact with this first resistance, I sold a little bit. And then at this last one here, I sold a lot more of it. So this is one that I just recently covered. This is one that I am buying a little bit of, Coupang. This is pretty much the South Korean Amazon or online giant. Company's growing at a very rapid rate, revenue up around 74%. I think that this is going to be a good one. A little more risk, obviously, higher risk, higher reward, all of that stuff. Ford is one that I recently just covered some on. You guys can see it had some support here at 11. Set some alerts there. Boom, all the way up to 16. The last one is NVIDIA. This is one that I kind of did get a little hammered on, but I still have my shares. I'm holding this one for a couple of years because I think NVIDIA is definitely carries a lot of long-term potential for sure. So some other ones that I am looking at is Carvana here. It's ticker symbol CVNA. Now I'm looking for a short on this. You guys can see almost every single time, we come in contact really above the 320 mark, we get a lot of sell-off, right? So it comes in contact, up here, sell-off. Comes in contact, almost there again, sell-off. All the way back up here again, sell-off. And with this distance, with the 200 moving average line, I think this is going to bring a little opportunity for some shorts here to step in. Setting your stops pretty much right above this high here. So you're risking $10 to possibly make about 40. So you could virtually be wrong, 4 times and still break even. But this is just one that I am looking at. Now, another one is ticker symbol BV here. This is one that I do plan on buying a little bit of. The reason why is because of the major sell-off we've seen from it. And let's actually go ahead and look at the 3-year chart here. So you guys can see it's definitely more of a choppy chart here, but overall, I really think that we'll start getting a lot more buying pressure entering. It's at about a 42 on the RSI. We still have a nice solid upward trend in the short term. The only thing that does concern me is the long-term trend is down, right? So you guys can see all the highs are actually like this, okay? So in the long term, if you're going to hold this stock for a couple of years, the trend of it's down, but I think with it being a short-term upward trend, with this trend line and all these supports hitting that trend line, I think we'll get a little buying pressure from around 15.38 back up to about 18, setting stops below 15. So pretty much with this tight stop, I'm pretty much going to risk, let's just say 50 cents to possibly make back up to the highs here. Possibly make about $4, which is a good risk and reward. Let's look at some other ones that I've looked at. Ticker symbol UNF. This is one you guys can see it does have some pretty hard support here at this 215 mark, if not the 210 mark. So you guys can see it hasn't really sold off, so to speak. It's just almost been consolidating with massive amounts of buying pressure coming up to, the 258 mark. So I think that this would be a decent one to hold for a couple of weeks and just kind of see what happens with it. Setting stops pretty much below this resistance right here, probably just below the 200. So you're ultimately risking $16 to possibly make, 40 or 50. So it's a decent risk and reward, but sometimes you got to make those trades. And the thing about it is, over the past couple of weeks, we've seen a lot of beautiful growth just from the market, right? The S&P 500 is up I don't even know. I think it's 16% in the past year, which is fantastic, right? For me, I'm a long-term investor. Most of my money is in the S&P 500, and in the past year, 16% growth. If you would have bought here at the peak bottom of the 2020 crash, you'd be up well over 92%. This is the thing about investing. You have to look at, sell-off as opportunity. Any time you guys see sell-off in the market, buy it, hold it, don't even worry about it. If you guys honestly get stressed or worried about the market not recovering, the way I always look at it is over the past 90 years, through all the Great Depressions, through all the ups and downs, through all the recessions, the Great Depression, the S&P 500 has an annual return of around 9.8%. So no matter what, you guys could buy literally at the peak highs every single year and still be up on your money. Okay, just have that long-term outlook and you guys will be great. Okay, getting back to some other stocks that I will probably buy a little more of. Home Depot, we've seen a little bit of sell-off, right? Went from around 345 down to about 300, hit that 20 moving average line and got a little bit of buying pressure enter. Home Depot is beautiful. It's a beautiful stock to have. You get a strong dividend. You historically outperform the market. No brainer. One stock that a lot of people have been looking at lately is Tesla, just because it hasn't seen the amount of growth that a lot of people expected from 2021, right? If you guys would have bought in at 2021, right January 1st, you would be down about 24%. But the beauty about investing is you have to look at opportunity from sell-off, right? So Tesla, for me, it just brings a little opportunity, so you don't have to buy in at the highs. You can just buy it, hold it for the next couple of years, and see what happens with it. So what's going on, guys? Hey, Carter, Trump, 2024. Alrighty. So honestly, this is just a great one that I've been looking at here, and on that electric vehicle space, we have NIO that's just been doing the same thing, right? Sell off a lot in 2020. Hasn't done much. I think that a lot of these electric car manufacturers were hyped up so much because of Tesla. People didn't want to miss out. People didn't want to miss out on opportunity with Tesla, so they looked for other options, more affordable options, and all of that. Okay. What do you think of BB? Let's see. So Bed Bath and Beyond. Okay, so just by looking at the chart, right, you guys can see the 3-year history. It does have a tendency to have this downward trend, but recently at the end of 2020, we had a lot of buying pressure enter. So this thing went from really lows here at $3.43 and highs here at $53, sold off back down to 25, back down to 23, back up to 45. So just by looking at this, what do you think? Do you think it's a higher volatile stock just because of these massive wicks? So each time you see a wick like this means that it's pretty much sell off, right? A lot of sell off, a lot of buying pressure, and a lot of volatility. Okay, similar thing in here, a lot of sell off, volatility, and all of that. Volatility brings risk. And so when I see stuff like this, I do see a good solid, pretty much 1 year trend with the stock coming up. Okay, but for me, with the volatility, it's always a little scary to hop into something like this. But if you have that outlook and you draw out these trend lines just like this, it breaks it down a little easier. Okay, so now by looking at it, you guys can see that every time pretty much it hits this trend line, we get a little buying pressure. Okay, buying pressure here, comes down, hits this, buying pressure here, comes down, hits this. So yeah, I do think we'll probably have a little buying pressure. And if you're going to swing trade this thing, set your stops. You could do it a couple ways. You could set your stops below the 200 moving average line. That would be, very hard support. And your pretty much your profit, you'd hope, would be about anywhere from 35 to 37. So you're ultimately risking $5 to make 10. So it's a, what would that be? A 2-to-1 risk and reward. So ultimately you could be wrong about 2 times and still make money. So it's decent for sure. It's decent for sure. Understand higher volatility, higher risk and all of that. And Delta is one that, it's hard to say. Delta by far is the better of the airline stocks. Okay, a lot of people always want to hop into American, just because look how cheap this thing is, $19. But look at the chart, massive amounts of sell off. The company before the crash, before the lockdowns and all that, was losing billions of dollars almost every single year. So now people are like, oh, well, this massive amounts of sell-off brings opportunity, but the company was already pretty much worthless to begin with. American off isn't the better option. Delta is, okay? The reason why, you guys will see. So before the lockdown, nice solid upward trend. We had that crash, slowly started working its way up. Okay, the only thing that does scare me is how we did have that breakdown below this 200 moving average line. Before, the 200 moving average line acted as very hard support and resistance, right? You guys can see it hits it in here. You see that wick down underneath the stock or underneath the candlestick. So that means we get a lot of buying pressure enter. So now with this, when the stock fell below it, when a stock's below the 200 moving average line, it has a tendency to act as resistance. Okay, so you guys can see it hit it here, sold off. Then it used old resistance as new support, hit it, and we had that breakout of that 200 moving average line. And then it really didn't do much. We had a lot of buying pressure. Just look at all these high wicks. A lot of buying pressure at and around the 200 moving average line. But then we had this massive amount of sell-off. So for me, I think Delta Airlines is still a buy, but is there higher risk? It's probably a medium risk. It's not as high as Bath and Body Works, but there's still a little more risk than companies like Amazon, Apple, all of those. So this, anything at or under $40 for me is a buy. I think that this is a good stock to have. I think in the next probably 2 to 3 years, we'll probably see it around $53 to $55, and then hopefully at these highs here shortly. So, that's the thing about, airline stocks is they're always higher risk. Getting kind of carrying on these travel stocks, we all know they got absolutely hammered. But look at Carnival Cruise. Very similar. What do you guys notice about this? It's very similar to American. It's a very similar chart. You guys can see before the crash, it was losing money, okay? Decreasing revenue. It paid out a 50-cent dividend, which was probably the only thing really keeping this stock afloat. Okay, so it was selling off. We had the crash. First of all, you guys can see it fell below that 200 moving average line. That's the only thing that worries me about Delta. But that it'll be all right. But then we had this massive amount of sell-off. Went from $51 all the way down to $7.80. We had this moment where people are like, the stock's going to double. The stock's going to double. That's why we had this huge squeeze right in here. But then reality always sets in, and what happens? People go, well, people are saying that, this company's not going to make money for years. And what happens when a company can't make money? How do they get by? They have to take on long-term debt, or they have to offer some sort of other options, bonds, debt, work deals with the government, all of that stuff. And do you think that's good for a business? Absolutely not. When a company takes on debt, it overall dilutes the company a lot, right? That's why a company like Ford is a prime example. Ford makes literally billions of dollars, but they have $160 billion in debt with only like 12 or 25 billion in cash. So if Ford ever goes through an extremely hard time, they're going to have to figure something out on the balance sheet because they have so much debt. But that's what Carnival had to do. They had to get through this time by pretty much taking on long-term debt. Now, you guys can see it had this very hard time breaking above pretty much $30. Okay, so it hit it multiple times. You guys can see, boom, 1, 2, 3, pretty much four times. And then it just sold off, got weak and undervalued. So now, what I think will happen is we'll probably see some support start stepping in at around $18 to $14. Now, I think that would be a decent buy zone just because it's going to be so cheap that you guys could hold it. And if worst comes to worst, if it sells off down below 14 or 12, that is just overall more support right here. And honestly, it probably won't get back down to $7 again, just because it is highly sought after. So I think that this is a good one, pretty much under 20, medium to high risk for sure. Looking at some other stocks, guys. So some other stocks that I want. Let me see. We gotta look at some. We have Arc Innovations that's doing some cool stuff. I think there's been a lot of sell-off. I bought this ETF a while back. But this one here, just a super powerhouse. A lot of people are saying that it's now, over the big run. I think that there's a lot of opportunity with ARC's ETFs, but it's an ETF, right? You're diversified among most of the time like 75 or 80 stocks. So you can't go wrong with it for sure. But for now, guys, that is it. I hope you guys enjoyed the episode. If you have any questions, ask them right now before I sign out. And we will see you guys later, guys. But yeah, alrighty, guys. I hope you guys have a great weekend, a great Sunday night here. And we will see you guys probably tomorrow with some sort of video. I hope you guys enjoyed it. Remember to stay happy, stay positive.